Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, December 6th, and how about that for a volatile weekend? I think John's name about sums it up here. That was a wild weekend. But John, I remember all the way back to our conference, you and Jordan Freed talking about how, liquidations play a huge role in this market. I think we saw that firsthand this weekend. What are your thoughts on this weekend?
Yeah, well, and thank you, Monty, CJ. It seemed that we were right at about a pivot point where we were either going to break to new highs, which a couple guys that I also follow on Twitter and Reddit were saying that we're either going to break up towards 77, and just keep running, or we're going to break down. And while they weren't rooting for it to break down like it did, and I think you're right, it was over levered because what was it? 300,000 accounts, guys, got flushed this weekend over the last 2 days. Saturday and Sunday, I think 300,000 accounts or more were flushed. So that kind of tells you that maybe it was stacked up a little too heavy on the put side, and short puts, that is. And when we broke through a level, the machines just slam out all that excess risk beyond the value of the accounts. So I thought that this was a good quote, guys, or a question. Which would you rather? Would you rather be buying more Bitcoin or pick your altcoin at all-time highs, or buying it 20% off? And if you look at it that way, it's not so bad. I mean, I'm looking at it, I'm zooming out. I think Max has said that on occasion, Max and Stacy. If you're ever really nervous about the graph, just zoom out a little bit and see where we are. So I think it was a lot of over-levered. I'm still not sure, guys, if it might have been not so much a fat finger, but maybe one of the algos that was put in there did its work a little too well, liquidated a little too much, and may have had an error of sorts, because we did bounce pretty fast and hard off of that 42,350 low that we hit. I mean, we hit it like that. I'm not going to be the guy that says only Stephen Weiss could buy it there, guys. Nobody else, no other human could buy it at 42,350.
I was impressed in how some of the exchanges held up despite the volatility. Had some limit orders fill on Voyager, so that was always a pleasant surprise. But you speak to those liquidators or those algos doing their job too good, John. There's a lot of criticism of Binance over a lot of top traders in the crypto space, like Peter Brandt as well as Willy Woo, discussing the order book spoofing that could have occurred or probably did occur on Binance. So this is a really good image of what this consists of. We had a lot of questions about what order book spoofing is and how it could affect price. But essentially, you can see this highlighted, three kind of layers of just sell orders, large sell orders placed by whales that really never have the intention of being executed. Their only purpose is to give the illusion to other market participants that there's further sell pressure coming into the order book. So, obviously people see that. They think, oh my God, we're going to put in a lower high here and then go down. I might as well front run and sell in advance of that. So, in traditional markets, that's generally frowned upon, and people call for regulation and whatnot. In the crypto space, it's just kind of the reality of what we have to deal with these exchanges and various order books. I'm sure we can look at a previous time in history where the order book has been spoofed to the upside and no one was complaining about it. Nonetheless, that definitely was a factor last night, or over the weekend, rather.
Yeah, no doubt about it, CJ. And I mean, if we look at just purely the liquidation data, it's pretty staggering. Just quickly looking at this, we saw $2.9 billion in total liquidations, and to John's point, much of that did occur on retail-facing exchanges like Binance. So we saw, you know, over 300,000 accounts liquidated. So going back to John's question that he posed, would you rather buy Bitcoin at all-time highs or, buy it as it pulls back at, 45K? I think that's exactly what the whales were contemplating in their minds. And, they realized that this leverage in the market was an opportunity for them to drive price down with, methods that CJ just talked about, order book spoofing, and just, genuine sell pressure entering the market. And that allows them to reaccumulate at lower levels. That's exactly what we saw. Like John pointed out, those lower levels were bought up relentlessly. And I just want to quickly give a shout out to a member of our community, Josh Nardi. I was hanging out in the room on Friday night when the market was tanking. And as you can see, this comment from him is timestamped 23:28. That is exactly at this moment right here. This is the Bitcoin 5-minute chart. So you could actually even go into a minute. He called this bottom right as it occurred. When he typed this, it started to really rebound. So some people in our community have been speculating whether or not Josh is Satoshi. This isn't helping his claims that he's not Satoshi. I mean, he was spot on with this. But yeah, that's just an example of some of the insights that are shared in our room. And, overall, this was a pretty staggering weekend, historic weekend in terms of liquidations. But I really do think that this was just an instance of retail traders feeding the whales and money flowing out of the hands of retail participants into these long-term holders and whales.
Well, and I think CJ brings up a really interesting point, Monty, just as you did. And that point is that it's something that I think a lot of us really appreciate DeFi, decentralized finance, and the fact that they are unregulated, really. I mean, it's regulated by the community, by the majority of the hash power and so forth. That's really the regulation for something like Bitcoin. Various jurisdictions have caused it to go underground or even disappear in certain areas, perhaps like India and China, but it's always there. It's just, like I say, I think it's underground. But one of the things that happens in a regulated market is that they do go after people for things like spoofing. And what CJ just described, if a whale, for instance, was leaning into a trade as if they were going to slam it or as if they were going to buy it and stacking up bids below the market or sell orders above the market, that's what's known as spoofing if they had no intention of executing those trades. Now, in regulated markets, they can fine you and basically throw you in jail now for spoofing. They've had cases where they've gone after firms that were more or less trying to do a head fake to all the other algos. And because it disrupts the markets. And somebody is trying to disrupt the market on purpose. So they send in a whole bunch of fake orders that are immediate or cancel sort of orders, just so that everybody reading what's coming into the market sees a whole bunch of sell orders stacking up and doesn't see that they're basically fill or kill executed or not immediately. And the purpose of which is so that they can drive the market to a level that they can buy it at, or they can drive it up to a level they can sell it at. So that's what's known as spoofing. You guys can look it up. You can also look up who's been, not you guys, of course, but our viewers could look it up and see that the SEC and CFTC have both gone after firms for spoofing. And some people somewhere are in jail for doing it and or paying huge fines for spoofing. It is rather hard to catch, especially on the high frequency side of the world, because many of these people are indeed offering real liquidity, but they are doing it for moments in time, literally nanoseconds. And so is that a spoof or is it real? And I think they more or less would determine it to be a spoof if you just stacked up a bunch of them, not just an order on the bid and the offer or just above the bid and the offer, but if you stacked up 5 orders on the offer really fast and canceled all 5, I think they would determine that in the regulated side of the street, CFTC and SEC, as a spoof trade. But that's good insight by you, CJ, that that may have been happening over the weekend as well.
Yeah, I mean, that was a clear, no debate about that one. It was intentional and very clear. But I do want to make a point about what you had brought up earlier, Doc, stating, posing the question: would you rather buy Bitcoin here, 25% or more off of its highs, or would you rather buy it at the top? I think if we just look at historic levels about how oversold we are and how we've experienced, true capitulation over the weekend. If we look at what we experienced in, March of 2020, one of the most notorious drops and declines in Bitcoin's history, we are testing those lows in terms of the oscillator oversold values. Same thing, very similar instance of what we experienced in our drop from, 60K to nearly 30K in a very short period of time. We're retesting those oversold levels. On the CCI below, you can see we've even touched below those levels. So, can we test the lows another time? Sure. But I think that the capitulation and the majority of it has already occurred, especially when you look at things like sentiment in terms of the fear and greed index. Anytime we get down to, the teens or the 10 level, typically it's an indication that a lot of liquidations have occurred and that we've gotten a lot of euphoria out of the markets. You can see in our last 3 pullbacks, I'll highlight here, we all retraced to basically this 10 to 20 level. When you look in March of 2020, when we had that historic capitulation event, then again in May of 2021, when Bitcoin fell, even in September, right, when we had our most recent pullback and that overall macro higher low for the trend. And so I think from a bullish perspective, it's very promising that, from a sentiment perspective, a lot of that euphoria is very clearly washed out of the market at our present time. So just wanted to add that in terms of sentiment and fear and greed.
Yeah, CJ. And, to that point, there are other metrics as well that are implying that we have, somewhat reached an interim bottom. And that's the interesting thing about Bitcoin and the fear and greed index is that, historically, when we see this level of fear, that's typically a good time to accumulate or, enter the market, especially when you consider the leverage shakeout that we saw over the weekend here. But another, on-chain metric that I think is very good for looking at, local bottoms and local tops is the active address sentiment indicator. Basically, this is the relationship between active addresses or, unique individuals entering into Bitcoin. So, establishing a wallet or holding Bitcoin on the blockchain and, that and its relationship with price. So every time we have price overheating and not too many new people entering into the Bitcoin market, this metric down here extends beyond this top level. We saw it, happen just as recently as the middle of October, kind of coincided with this local top. But now what's interesting is the fact that we're retesting these bottom bounds, which historically have been ideal levels to accumulate. As you can see here, as recently as May, it coincided with our local bottom and a period of accumulation. Back here in March with that liquidation event that CJ was just hinting at, we saw it again here. Pretty much any time we retest these bottom bounds in terms of on-chain activities relationship to price, it has been an ideal time to accumulate. So, I do think we just got a bit ahead of ourselves over the weekend. The market got a bit greedy. That greed seems to have been shaken out with these liquidation events. And as a result, we are seeing whales accumulate. We are seeing signs that now is an ideal time to accumulate before this final leg up. So interesting stuff here. It was a volatile weekend. Many signs are pointing to the fact that we are beginning to recover already. So we'll keep an eye on that.
Well, and I was just doing the calculation, guys. So the 26th of November, we were at a reading of 2.86 in the Bitcoin volatility. Now, 2.86 is a 46 VIX because they do it in percentage terms. And we know that a 1% move is 16. So when we talk, just because everything's different with Bitcoin, they like to refer to it not in the same metric that we do for the S&P 500, which would be, for instance, we're at a 29 VIX. So that would be probably about 1.7 because a 2 VIX would be, 2% move would be 32. Again, 16 times 2. So it was at a 46 versus our 29. And then it shot up to, what was that, 60 over the weekend. So 46 to 60, big move. That was 2.86 to 3.8 on the Bitcoin volatility time series. So that was definitely something that was part of this washout. And when we see those kinds of moves, a high volatility move like that, it definitely made me, I bought HUT this morning, HUT, one that I've talked with you guys about on the equity side. They're a Bitcoin miner. I like the company. I think it's a good ESG play as well. And I can't believe that I'm getting it here. I got it this morning below 8. And we'll see how long it stays, in that sort of range. But it's also not surprising, since stocks don't trade over the weekend, that Riot and Mara and MicroStrategy, anything exposed on the equity side to Bitcoin in particular, was hit right on the opening, because they would have been hit worse, by the way, if we would have opened at 42 on the Bitcoin 42,350. But luckily, we've got a little bit of a recovery, and now we'll see exactly how it gathers itself as we close in on 50 again.
Yeah, those crypto-related equities were hit very hard. Obviously that makes sense. Like you said, John, I'm sure we would have seen extreme volatility in those over the weekend had they been trading. But one thing that this, weekend has definitely proven is that there are lots of opportunities in this market. If you believe that nothing has fundamentally changed and that Bitcoin is still on a positive price trajectory, this bull run is still on. There is incredible opportunities, especially in those miners, with some interesting options plays for end of year, start of next year. So we'll be looking at those, talking a little bit more about those in our Doge of the Day as well. But I think that's all we got. Any parting words for our audience, folks?
One more item regarding the alts that I do want to go into, more specifically Cardano. But Doc, I do want to ask you, for the benefit of our audience members, you were talking about that Bitcoin volatility time series. Where are you accessing that data? What site?
Sure, the Bitcoin volatility one.
So
is that the one you were talking about? I'm sorry, I missed that.
Yes.
Okay, I could put it in the chat if you want, or I could just show it to you guys. I could share it, I guess, but it's just buybitcoinworldwide.com, the Bitcoin Volatility Index. And it'll show you, you can pick your time frame, guys. So for instance, let me see, I could put it up here. I'm going to shorten it up to, let's see, 21. Again, like I say, you can shorten it to whatever you want, but I'm going to put it up here now. Let's see, share.
Nice.
Share screen. Share screen. Let's see. Share. Tell me when that goes up there then, guys. Do you see it now?
Yes.
Yep.
Okay. So there you see that the 30-day was 372 and the 60-day was 334. What I did was I just dragged my mouse and looked here at the Nov 26th. That's where I saw the 2.87 right there, 2.87 vol. And then as I move it across like this, in fact, if I shorten it up to here, we can see that it It's 372 now. If I don't know if I can shorten it to let me see. Can I take that to, not sure if I can do this or not. So I'm just going to do it on the fly and see. So the high, it's not really picking up what the high reading that I had was 3.86. But nonetheless, you can see that it did move up from that 2.87 there all the way up to like 3.8. And like I say, I think that creates a bit of an opportunity, guys. Here's all the different charts they have down here. And then as you roll down through it, you can see that they do, for instance, Bitcoin price versus volatility. And one of the ways you can do that is then just go in here and say, okay, that I don't want to see 10 years. I only want to see this much time and things like that. And then you can just pull it down here on the bottom like this.
Thanks for sharing that, John.
Sure.
Obviously a very useful tool, not only for just buying and selling spot, but also for anyone who's trading those Bitcoin options, because volatility is always very important in terms of options pricing. But what I wanted to share in terms of altcoin news and an asset that admittedly I have picked on a little bit in the past, but that ends today.
It does?
We'll see. But I like what I'm seeing so far of Cardano's really first and major, I guess you could say most prominent decentralized exchange. This is not live yet. We are currently in the test nets, but this launched late last night, and a lot of individuals were really interested to test it out. But as of now, Cardano has not had a lot of retail demand other than just staking. There hasn't been a way to earn yield in terms of yield farming, as well as like a thriving DeFi ecosystem on Cardano. But this is the first foray, or one of the first major forays for Cardano into the DeFi space with their smart contracts finally going live. But you know, earlier I was looking to, you know, participate in some of these liquidity forums. You know, one of them that I tried to join earlier but was unsuccessful just because I was not able to swap my tokens was the ADA Husky LP token pair. I thought that was pretty interesting and worth demoing. But overall, you know, this could be big for ADA. You know, we have yet to see the demand. This is still a test net, but nonetheless, I think it's a very promising start for the future of DeFi on Cardano. So interesting stuff.
Very cool.
Yeah, it was funny. Everybody was a little disappointed last night because they were like, we're going to launch in the evening, and it didn't launch until like 2, 3 a.m. Central Time.
Well, people have waited, you know, years for some utility on Cardano.
That's nothing for the Cardano people.
What's a couple more hours? Am I right? But yeah, that's really exciting stuff, CJ. We were really excited about that. We'll keep watching that, and I know you've been, you know, messing around, kind of checking out the utility of it, how it compares with other DEXs as well. So we'll report back to you guys with that. But as always, thank you guys so much for watching. We'll be doing our Doge of the Day right after this, where we'll be taking a more in-depth look at some altcoins. If you want access to that, as well as the rest of our community, you can try it out at marketrebellion.com/try-crypto. You can try the first week for just $7. We got a pro charting service, 24/7 chat with a community of traders from all around the world, where people, you know, share their insights, call market tops and bottoms like Mr. Jon Najarian, and a whole lot more. We also publish news, trade insights, and education. We just published a course on earning passive income in the Terra ecosystem. Highly recommend you check that out if you're interested about yield farming. And there's a whole lot more content there, so definitely check it out. You can try it for just $7 for the first week. And also, thank you to the sponsor of this show, investvoyager.com. Head over there if you're looking to trade some crypto assets and earn interest on your crypto assets as well. Earn up to 12% on assets like DOT, 10% on USDC, a stable coin. So definitely head over there and check them out. And if you do, use code REBEL25 when you sign up and fund the account with $100 for $25 in crypto. But that's all we got for today. Please like and subscribe as always. We'll be back again tomorrow Should be a pretty exciting week. Lots of opportunity in this market, as we pointed out. But have a great rest of your day, folks. We'll see you again tomorrow.